Hey everyone, welcome to this new video on Apollo Hospitals. This is the second hospital we are covering in the Nifty 50 series after Max. Although Apollo Hospitals is not really a hospital, it almost has two businesses inside it, two major businesses inside it. And we'll get into all of that. This is a very interesting company to study because you really have to study a lot of industries to actually understand Apollo Hospitals. And having said that, we'll dive straight into the industry analysis because I have something very interesting to show you guys as well when it comes to the industry, especially for industries such as the hospital industry. Okay, but that we'll cover just in a few minutes. If I'm to go through again through the industry context for Apollo, it operates in the private healthcare space. Okay, it is in the hospitals as well as in the organized pharmacy retail space. If you look at the value chain of this industry, you need a lot of talent and a regulated input. So you need a lot of doctors in it's a hub and spoke value chain firstly. So hospitals sit in the center and there are different spokes arising out of it. So clinical talent is one spoke going in. Then there's the actual hospitals which sit here in the value chain. Then there's the different ways to pay the hospital for their services. Then there's the pharmacy fulfillment and the chronic care layer, which is after the healthcare services are provided. This is needed. And then, of course, there's the end patients who are actually going in and buying for these services, right? Across this value chain, if I'm to talk about some structural strong points, one would be that there's a shortage of doctors in India, of high quality doctors in India. So this is one structural point which impacts this value chain a lot. Okay. And other than that, the payer the financing mix is changing. We'll look into the regulations which have come in, which is also impacting the value chain. Okay, so this is I'm going to skip types of players because there's nothing new or value providing really here. And this is what I was talking about. There's been insurance expansion. So every citizen aged above 70 gets a benefit under the Ayushman Bharat scheme up to I think 5 lakhs a year. And there are also regulations to improve the education and to get the supply of good quality increase the supply of good quality doctors. Okay, what are the tailwinds in the industry? Insurance mix is going up, high acuity case mix is going up. It's a tailwind for the industry, but it's kind of a sad thing to hear that there is a need to have these sort of operations. But anyway, some of the headwinds are, as I said, the specialist talent bottleneck is there. And this is the interesting one, the hospital expansion cycle execution risk. A large number of chains are expanding their beds across multiple micro markets, right? And this is what I want to showcase to you. I was just doing this research on Claude, and if you look at the returns across the hospitals, you see before FY21 they were in the range of around 3 to 11% ROCE range, but the returns have improved dramatically after that, and now they have been in the 12 to 23% range. What happened was there was a lot of capex done in these years, and after FY19, the capex kind of slowed down, which allowed the returns to improve. You know, if you look at and now again the capex is intensifying, specifically in the micro markets. If you look, beds increased at a 3% CAGR in FY19 and FY24, and now they are projected to increase at the 10 to 12% rate with the capex plans all of these hospitals have. Some of them are doubling their bed capacity. Um, so what we need to be careful about is, and what's going to happen, what looks like going to happen is the return ratios are going to come down. Okay, it's not a bad thing. It's a very interesting thing about this industry, especially about the supply side of this industry, right? So I'm gonna cover a few more things about this analysis shortly. Right. So the point I was making earlier is, and if we just go through it again, because this is very, very important, what happened is this sector went through a huge capex, which kind of depressed the returns because hospitals take a long time to build, and they're a drag on the margins. They need to break even, then they're a drag on the margins, and finally they reach a state where they are contributing to the returns on the invested capital. And this is exactly what we saw after COVID when the capex kind of subdued. And if you see, Max had 2,700 beds in FY19, and then it still had 3,500 beds after 6 years. Fortis remained at the same levels. Narayana remained at the same levels for almost a lot of years. Apollo and Manipal had expanded. But what I'm trying to say is for the 5 years, the beds were not really being added at a glorious pace, which allowed the return ratios to improve. And that's why hospitals became like good businesses, and they've seen the kind of returns which we've seen. But now what is happening is there's a capital cycle in play. There's supply side is increasing. Now, why this is not a huge worry is because the demand is very structural. India has very less beds per person, especially if you compare it to the WHO standards. Now, if we think this, we'll say, okay, no worries at all. But the worry really is, yes, overall India has a shortage when it like there's a huge demand for hospital beds. But when you look at micro markets, that's where the interesting things is, where the supply in the micro markets is really increasing at a great pace, and that's where we need to be careful. Like if you see in Delhi NCR, if you see in Bangalore, 3 to 4 chains are expanding at the same time. So this is the interesting thing. In the last 5 years, what we have seen is hospitals, their RPOB has gone up, right? This we'll see later on for Apollo as well. But the revenue per bed has gone up. The occupancy rates have gone up. Profitabilities have gone up. These companies, these hospitals have made good money in the last 5 years where they haven't expanded. Now to grow, they are expanding by increasing the number of beds. But what has happened is that there is a possibility of some supply side over supply, especially in these micro markets. So what I think will happen is over the next few years, definitely the return ratios will be impacted given the kind of capex these companies are doing. But I would still say this is not a huge concern for worry. Why I will say this is number one, demand is structural, right? Number two, the expansion before FY19 was a lot of debt had to be taken for that. This time the expansion is slightly different because the companies are kind of using their own internal accruals and some debt to fund it, right? And then you can see who's the best position also to ride through this chain, but I'm not going to go into that. But this was like an interesting and a different analysis. This was like the supply side analysis. A lot of analysis usually is done in the demand side. Okay, what's the demand for this industry? Everyone wants solar panels. There's a huge demand for solar electricity. But if so many solar module operators are going to come in and everyone's going to be supplying that, then there's the supply demand mismatch. So a lot of times the supply side analysis is not done. So that's what we try to do for the hospital sector. And I'm going to add this on the portal as well. This is kind of complicated. So I'm kind of thinking what's the best way to visualize this on the portal. So I'm midway through that. But yeah, there is some caution to be done over the supply side of hospitals, but not really. And if you choose your company as well, also, this is not a big worry because this is the nature of the cycles in all industries. They had good returns. Good returns will attract more capex, and then the returns will suffer because of that. All right. So now I'm going to dive deeper into Apollo. Okay. And that is the next thing we will do. So, having laid the ground of the industry, when we go and study Apollo hospitals, what we see firstly is it's almost two businesses which are running in Apollo hospitals. 50% is the healthcare services, which is the hospitals, and 41% is the Apollo Healthco services. Now, Apollo Healthco in it has the offline pharmacy distribution, right? It has the online pharmacy. There's an Apollo 24/7, and there's also the broader distribution. They have a company called Kaimed, which is also the wholesale distribution business. So this all comes under Apollo Healthco. And they also have AHLL, which covers diagnostics and other portfolio of retail health and specialty care, but that's just 7%. So what's interesting about Apollo is that it is the hospital's business, and also the other infrastructure around hospitals is also very strong in terms of retail pharmacy and pharmacy distribution. However, this is going to be demerged from Apollo Hospitals. So it's kind of interesting, what do we want to dive into. But yeah, I think Q4 FY27. So in another year, this is going to be listed separately. So yeah, that's interesting, right? In terms of the revenue growth, everything is growing in double digits. So this is a good sign. Nothing new insight to take away from this other than just thinking of Apollo as a double digit grower. In terms of mix shift, yes, Apollo Healthco I think has been growing slightly faster than the healthcare services, so it has taken up some share. But overall, again, I would say Apollo is like a two business company almost. So yeah, this was quite interesting to know about Apollo, and then we now go into the quarterly analysis, and we look at the latest quarter analysis. So that'll be next. All right. So if we look at the quarterly scores, they had a good quarter last one, which was Q3 FY27, and let's see what happened here. They sustained double-digit top-line momentum across all verticals that we've seen as a trend for a few years now. So they maintained this. Significant progress on the digital 24/7 path to profitability. Okay, so the losses are narrowing to an all-time low. So that's good news. Results were good. Rationale for the good score was exceptional bottom line growth with PAT increasing 35%, robust margin expansion in the core hospital businesses. Right? Guidance and risks we can ignore, but all in all, the results were really good with and this is what we've been observing about Apollo, is that across the segments there's good news. It's not like one of the segments is a drag on the business. Now this is very interesting. Hospitals have a few key variables which are to be studied, right? And we'll go into this. Hospital occupancy rate. This is the percentage of beds which are occupied in the hospitals. Look at this. This is so good from a business. Like if I'm the owner of Apollo, I'll be so happy. From FY21, 55% has gone up to 63, and that's inched up even more to 68 after the pandemic reset. So this is great. This is a good sign for the business. How high can it go? I'm not sure. I think max runs at 70, the upper highs of 70s. 80% is the max that at which it can go, but this is good progress. Look at the RPOB, same story, 40 to 45 to 51, double digit growth. Now it's at 60%. This is great, and this is the reason for the great performance of hospitals in the last 5 years. Their occupancies have gone up and their average revenues per bed have gone up, which has resulted in great revenues, and they didn't do a lot of capex. Now, for a key variable of the physical pharmacy count, look at that. Great progress, 10% double-digit growth has been happening year on year. Rollout is continuing even as management shifts attention towards same-store growth. Digital cash loss that we see has been narrowing, right? So that's the tracking which is going on here on a quarterly basis. Private label, I'm going to ignore this one, right? So these were the key variables that we saw for Apollo. Let's look at the growth, okay? A score of 7.7, not bad. What's the story behind this story? New hospital commissioning across 1,500 operating beds are being added, right? So this is the new growth story for most hospital chains, where the story has changed from ARPOB and occupancy rate going up to now the revenue or the growth is going to come through physical addition of beds. Okay. Healthco's digital business is gonna break even soon, and the diagnostics and physical pharmacy business are expanding significantly. Okay, this is just 10% and a supporting business to the hospitals, so I'm not gonna go deeper into it. But the bottom line is that you can expect the growth rates to be around the same as that has been for the past few years, which is mid double digits. And the key story here is the transition from ARPOB and occupancy rate improvement based growth to the physical bed addition growth, which is going to play out in the next few years. Okay. Quickly concluding the guidance as well, the company has been guiding for double-digit growth. That's what they've been guiding in the past 2 years as well, and they've kind of achieved it. I think they were almost in line. They said mid-teen growth, but they actually came out with 13 to 14% growth. So they kind of missed it. But overall, the company has been given a credibility verdict of credible, which is fine, but it's, don't take them exactly for what they're saying. They're saying the break even has been delayed to Q1 of FY27. The bed capacity expansion is being tracked on the portal, and the EBITDA losses, yeah, this will be the case as the new hospitals commission. They will be the drag. They will be a drag on the broader metrics, performance metrics, right? So this was the very interesting discussion of Apollo Hospitals. I hope you liked it. And yeah, thank you for watching. Until next time.